Let's connect with Robert Pryor. He represents Credit Suisse, joins us live now from Singapore. Robert, good morning. Thank you for joining us. Robert, from a famine of policy announcement, now we have a feast of good news when it comes to India.
Yes, which makes a nice change, to be honest. I think even the more optimistic amongst us have been pleasantly surprised by the raft of measures taken. I mean, obviously we need to put this in context. I mean, expectations were incredibly low. These measures are not going to transform the economy overnight, but clearly I think they are a step in the right direction. They are market friendly, and I think they will have at least modest positive effects for the macroeconomy, in particular the multi-brand retailing, if implemented, of course, should in the long term help bring down inflation. And all these measures opening up various sectors of the economy to more foreign investment will help India finance its current account deficit as well. Key risk, of course, is whether the government can actually implement them.
Robert, you've also got the credit policy today. 97% of economists do believe that it is going to be a status quo policy by the Reserve Bank of India and that they would keep key rates unchanged. Do you think they could be in for a surprise today?
Well, we know the RBI always likes a surprise, so we can certainly never rule it out. However, I mean, logic at least dictates that a move is very unlikely. Firstly, because of that very disappointing wholesale price number we had on Friday, and secondly, because of course, the risk is that some of these measures, all of these measures, possibly are rolled back on the basis of significant political and public opposition, and then the RBI would look a little embarrassed if they clearly pin a rate cut on measures that are subsequently withdrawn. So, never say never, but particularly with the RBI, it is on our research the most surprising central bank, or the central bank most likely to surprise of any central bank in Asia. But we're certainly sticking with no change, but a cut in October.
Robert, now the bad news here is that Indian markets this year, at least Indian equity markets this year, are up 20%, and we've got record inflows of about $14 billion at a time when the general outlook for India is not all that promising. So how much of the good news do you think is in the price?
I think, probably by the end of today, the vast majority of the good news is going to be in the price. Or put it another way, the government will have to do more, even more in terms of reforms to keep the market going, and/or the macroeconomic numbers are going to have to improve. Now, personally, I wouldn't rule out either of those things happening. I mean, there is talk about the government introducing some further fiscal tightening measures, at least discussing those measures this coming weekend. I do think inflation will come down from these levels. I do think growth will improve from these levels, and I do think the RBI will eventually cut rates more than anticipated. So, yes, we may well be in for a pause for a little bit, but I really wouldn't be, overly pessimistic about the market right now.
Robert, the other feature which has differentiated Indian markets from other markets is what's happening to China and what's happening to Brazil. So in this scenario, if the global risk-on trade reverses, what do you think will happen to global liquidity, and do you think Indian markets will tag along or Indian markets will outperform?
Yes, I think that's probably the bigger risk in some senses, is that global liquidity dried up again. I mean, clearly, again, we've had a raft of good news from the US and Europe on that front, which has buoyed asset markets. The danger, I guess, is that the markets in time, maybe in the next few days, start to focus again on the macroeconomic fundamentals, i.e. what is likely to be ongoing poor real growth data out of both the US and Europe as well. Does India outperform in those circumstances? Probably not. No, I think India would be an underperformer in those kind of circumstances. Not necessarily relative to other BRICS, however. You know, we've also got to bear in mind, I think that these other BRIC economies are facing significant challenges themselves. It's always tempting to think that it's only India that is facing problems, but Brazil and China are suffering, you know, quite a powerful slowdown in growth. And if risk off is associated with a fall in oil prices,
Right.
then clearly Russia would be impacted.
Robert,